Hello everyone, Godre here, and this is Follow the Money Hot Stock Edition. Right, just as I explained, hot stocks. Basically, I'm going to be looking at the stocks that are the hottest at the moment on the Nigerian exchange. That's Nigerian stocks that are hot. We're going to be doing this every now and then. So today is Hot Stocks Nigerian edition. There would also be Hot Stock US edition. So if you're somebody who is invested or vested in the stock market in Nigeria, then this is a show for you. So I'm going to profile in some stocks that have been one of the best performing stocks, at least in the month of February, and trying to make sense of it. Why are these stocks hot? Why are they top on the charts? And should we be buying them or selling if you already have them? So we will start firstly with the top stock at the moment, which is UPDC. So UPDC is a property development company that, was part of the UAC family. And so this stock gained 38.5% last week. And already at the end of trading, the first Monday of the week, it's already gained 9.6%. So obviously this stock is pretty hot and investors seem to be loving what they are seeing. So what exactly is driving performance for the stocks? Before we get there, let's even look at some of the fundamentals, like some of the indicators driving UPDC. So UPDC is currently trading at a price to earnings ratio of 58 times. That is super expensive. Remember what I say always: the closer a stock is to 1, the cheaper it is, using price to earnings ratio as a valuation metric. So at 58 times, it means anybody who is buying the stock is buying it at 58 times its earnings per share. They haven't paid any dividend of recent. In terms of market capitalization, the stock is valued at about 52 billion naira. Now, are there any fundamentals that maybe we can cite to? I'm not sure they've released their full year numbers yet. The last that we saw was their quarterly earnings, and from the quarterly earnings, as at December 2024, which I have here, total revenue was about 606.9 or so billion, and the net income, which is profit, was about 653 million. That's quarter. Now, if you look at the company on an annual basis, net income was about 917 million. Margins in terms of net profit margin was about 7.6%, and the return on investment 7.64%. So makes you wonder why what investors are actually looking for in this stock and why it is hot. But I mean, if you look at the charts again, this is a stock that just recently started going up. So it's not like it's been like this all year round. But all of a sudden, investors kind of see UPDC as one attractive stock. I mean, this time, let's say a month ago, UPDC was trading at about maybe 1 naira or thereabout, per share. But all of a sudden now it's at 2 naira 84 kobo per share, making it one of the hottest stock on the exchange at the moment. Now, it seems like it's a profitable, stock. The company is making money, but I don't see how I'm going to buy a stock at 58 times their earnings. Something's got to be going down there. I suspect that there's probably a capital raise that is beckoning or reckoning or somewhere around the corner, or there's some kind of acquisition. That's what tends to happen when you see stock share prices just start to go up without any explanation. But I'm going to find out why this is happening, and then when I do, I will let you know. But for now, this is one of the hottest stocks on the exchange, gaining a whopping 9.6% on Monday and over 30%. So it's probably gained over 40% in February alone. Hottest stock out there. Now, the next hot stock on my list is Cadbury. Cadbury Nigeria. It was flat at 29.35 on Monday. Monday the 10th. So at least when we taped this, Monday the 10th of February, it was flat. But the week before, it was one of the hottest stocks, gaining 27.61%. So is this one of those stocks that I'm going to be buying? Let's look at the the valuation. Cadbury has been loss making for a bit, so if you want to use price earnings ratio to value Cadbury, you're probably not going to get anywhere close. If you look at these EV to EBITDA multiple is about 9 times, which sounds like it's a little bit expensive because its enterprise value is trading at 9 times is EBITDA, which doesn't really consider depreciation, interest, and just focuses mostly on the core operations of the business. Market cap is trading at about 66.7 billion. Now, here's what I think is going on with the company. FMCGs, just like Nestle, as I mentioned some time ago, are likely to raise capital because of how decimated their balance sheets are. So I kind of reckon investors see this as an opportunity to buy, because if they are raising capital, then it's pretty likely that their share prices could go up, because if some investors believe the current share price does not necessarily depict the realities of the company, right, or the intrinsic value of the company at the moment. And looking about intrinsic value, they did release their full year numbers, and they did post a loss of about I think 104 or so million. However, revenue was about 129 billion, higher than the 80.3 billion they did a year earlier. So they actually are posting higher revenues, but from a profitability standpoint, they seem still to be struggling, just like most FMCGs. Now, operating income wise, they did also post a positive one of 73 billion. So this is not really about the fundamentals of Cadbury. This seems to be about possible capital raise that maybe some investors have already had hint of, and maybe that's why they're positioning, or they kind of feel like they're going to do this, and that's why Cadbury all of a sudden has turned out to be one of the hottest stocks at the moment. And so if you are somebody who's looking at Cadbury, you're probably looking at Cadbury for as an investment to buy for the future, or you're betting that at the current price of about 29 naira 35 kobo, maybe if they're going to raise capital, they're probably going to raise capital higher of that price. Who knows? It could even be that maybe the gist is that they're about to delist. I don't know. Maybe that's the gist, because this is typically what happens, and that's why share prices tend to go up that much. So Cadbury, one of the hottest stocks that we saw last week. Now, another hot stock was FIDSON. FIDSON was pretty hot last week, and it gained about 24.4% in 1 week alone to close at 20 naira 90 kobo. Now, today, it kind of shed like 3.35%, perhaps because investors, thought that, well, a lot of the gains they saw last week was enough for them, so it dipped. And that was basically one of last week, that share price was its year high. Never seen FIDSON at that kind of share price before. In fact, it's even its 5-year high, at least the last 5 years. Let's not even go to the max level, the last 5 years. So FIDSON is like at an all-time high price. If you're buying FIDSON at the moment, just know you're buying FIDSON at its highest ever price. And that price comes at a 9 times PE ratio. 9 times PE ratio might not seem that expensive or too expensive. I mean, just compared it to UPDC at 50 something X. However, I kind of feel like that price is a little bit high. So you might want to just take a look and see if the price will dip a little further for entry. But let's even look at the fundamentals for FIDSON. FIDSON's revenue was about 24.4 billion last year. Net profit about 1.6 billion compared to about 1.9 billion the year. So I'm looking at the quarter, I beg your pardon. So let's look at the annual numbers. Annual numbers was 5 billion net profit, and of course that compares to about 3.6 billion a year before in 2023. Revenue was also up from 53 billion to 84.1 billion. So pretty solid numbers from a fundamental point of view. But like I said, it's trading at 9 times its earnings, which, I mean, it's not so expensive. But I like to go into stocks when they are at like 5 times earnings or lower. That's usually my kind of entry point. So, but at 9 times, who knows? Maybe there's still an upside here, but I do think it's a limited upside. Except, again, there's something else that is going on there beyond the fundamentals for FIDSON. Anyway, FIDSON, one of the better performers last week. Now, one of my favorite stocks, and I think I kind of missed the boat on this one because I tend to always have the stock in my portfolio, but I've not had it in my portfolio for a bit. And that is Better Glass. So Better Glass is they basically make bottles that they use for soft drinks and drinks. So the bottles and cans and all that. That's basically what Better Glass does. And it's one of the better, most durable manufacturers in Nigeria. So glass making company, mostly for packaging, drinks and packaging. Well, companies that package products. So Better Glass was up 21% last week to 86.5 naira per share, but it's already up 10% again and looks like it's going to crack that 100 naira price level. It's currently at 95 naira 15 kobo per share. So that is a super hot stock. And I kind of think this is also its 5-year high. I've never seen Better Glass at this sort of numbers. The first time I ever bought Better Glass was maybe in 2014 or so. That's when I started tracking the stock. Another time was probably around, the first time I bought Better Glass was about 19 naira, and then it kind of hit like 40 bucks or so, and then I kind of exited. But now Better Glass is at 95 naira per share. So one of the better performers. However, its price to earnings ratio is 4x. So that sounds like it's still cheap. Perhaps that's why investors are looking at that stock. Now, the thing with Better Glass is that it's a solid company. They always post good numbers. Whenever there's a downturn, they do suffer because there are a few times where I've seen their profit dip. However, if you're somebody who's looking for dividend, Better Glass doesn't really pay a lot of dividend. So, no, I beg you, but let me just rephrase that. They pay dividend, but the dividend yield is not that, that great. So, for example, average dividend yield is about 1.6%. I mean, come on, that's just like, I better just keep that money to myself. So if you're investing in Better Glass, you're obviously not investing because you think that dividend is going to do anything important in your life. It's just too small. Now, what you probably are looking at is capital appreciation. However, Better Glass takes time to appreciate in capital, and you've got to be really, really, really patient to want to enjoy it. But for those who have already bought it, I think that, or who bought it maybe a year ago, they're probably enjoying the benefit of that investment because the share price has basically almost doubled since then. But look at the fundamentals as well. Better Glass revenue 117.5 billion compared to 62.9 billion a year ago. So that's like between 2014 and 2024 and 2023. Better Glass has done way better. And then in terms of no pun intended, by the way, in terms of net income, 13.9 billion compared to 6.4 billion. So that's more than double its earnings. And so no surprises that Better Glass is one of the better performing stocks out there. No pun intended again. So in terms of fundamental solid stock, if there's one stock that I would want to put in my portfolio, it will be Better Glass, but not because of dividend. The dividend numbers, like I said, pretty paltry, and I don't see them springing any surprise this time around. So you want to go in there for capital appreciation reasons. But the way the share price is going now, imagine that it's gained 10% today already. It gained about 21% last week. So it's already gained 30% within the space of just maybe 10 days. So it doesn't look like it's the right price to get in. But you know what? I mean, if you're here for the long haul, then you might want to, look at Better Glass as one of those stocks that you want to put in here in your portfolio. Now, last but not the least is Presco. Where Presco, one of my favorite stocks, solid company. They've been posting profitability gains for years now. If you look at their fundamentals, revenue 198 billion. It was 47 billion just like in 2021. And you see, like, even if you sort of like adjust it exchange rate wise, you would still see some kind of growth in there. And so net income as well, 9.7 or so billion. What am I even saying? Yeah, 97 billion compared to 32.8 billion. So solid numbers here from Presco, and solid margins as well. So I mean, if you're making 97.9 billion out of revenue of 198 billion, that is like 40% profit margin. Very, very solid numbers here from and Presco. And then, of course, even if you look at Presco's profile, or you want to look at whether it's expensive or not, I also think that it's cheap. Currently trading at a price to earnings ratio of 7.2x, right? So imagine if you had put the stock in your portfolio like 2-3 weeks ago, you probably will be smiling right now. It is also trading at an all-time high at, almost 780 naira. So currently at 750, gained another 7% today after gaining close to over 20% the week before. It is now gaining another 7% today. So looks like investors are still betting positively on the stock. Never seen Presco this high. Just to give you some perspective, in 2000 and say 22 or so, or 23, Presco was still trading at about maybe 40 something or so. Now, in fact, 2024, it was trading at about 400 and something naira per share. So now it is now trading at 750 naira per share, making it one of the top 5 hot stocks over the last week, based on Nairametrics tracking. So which of the stocks do you think you want to put in your portfolio when it comes to buy, sell, or hold? So I'm going to do my own buy, sell, or hold, and I'm going to start first with UPDC. So UPDC, buy, sell, or hold. Look, for me, it's going to be a hold. I really don't know what's going on in that stock. If I haven't bought it, I'm not going to be buying it. But if I own that stock, I probably might want to wait because you want to see what is panning out at the moment. So it's probably going to be a hold for me. For Cadbury, it's also going to be a hold for me if I own the stock. If I haven't bought it yet, I want to wait and see because I kind of feel like you've missed the boat on this one. So for me, for Cadbury, it's going to be a hold. For FIDSON as well, likely going to be a sell for me if I want to do a buy, sell, or hold, because I think at this share price, it's going to be very difficult to hold on to that number. It's already trading at about 9 times its earnings. So you might want to see that stock fall a little bit more if you want to buy it. So I think that the chances that Cadbury's share price might probably fall a little bit more. I'm not trying to play gloom here, but I mean that's just what I feel. And then we look at Better Glass at 95 naira looks like a sell for me if I currently own that stock. I don't like that dividend. Again, it's a stock I would like to own, so at the right price you probably want to buy it, but for now at this sort of levels seems pretty steep, even though the price to earnings ratio is low. But the problem, like I mentioned with Better Glass, is that it doesn't really attain very good capital appreciation because it has a little bit of poor liquidity when it comes to the volume of stocks that has been traded for Better Glass. Now, so that is why I wouldn't buy. I'd rather sell if I own the stock and then wait till a correction happens. But again, the numbers are solid, except maybe Better Glass post impressive dividend, but the dividend yield is really not great. That's the thing with Better Glass. Even if it is 6-7% this year, that's still not great for me. That's the problem. And of course, Presco at the current price, 7x looks like it's going to be a tough one. I'll probably hold on Presco, not a buy. Presco's probably going to be a hold for me, and wait for a little bit of pullback. When it does pull back, then maybe you want to go into it. In terms of dividend, Presco does dividend yield about 4.7%. Projection is about 11% dividend yield for Presco. If it does hit those kind of dividend yield, then that's a good one. For example, in May last year, Presco paid dividend of about 24.3 naira, which was circa 11% dividend yield at the price it was back then. Right, so I don't know whether it's going to be able to sustain that level of dividend yield in 2025, but I don't think so, because if you sort of use that 24 naira into this dividend yield, I mean, you see that it's pretty small, 10% of 750, 75 naira. So you're looking at dividend yield at the moment of close to 5%, which I said earlier. So for Presco to want to pay, to going to hit that 11% dividend yield, they're going to be paying like 70 something naira per share. which, I don't know, who knows, maybe they might do that, and that's what I haven't checked yet. They might probably pay that. Anyway, that's my hot stocks for the week. I'm gonna be doing another version of this again, so because this is the earnings period, so a lot of companies pushing out numbers at the moment. So watch out for more of my hot stocks and buy, sell, or hold, which would always follow the hot stock that I gave. This is Follow the Money, brought to you by Nairametrics Hot Stocks Edition. My name is Ugodre. Until we do this again, do have a profitable day ahead. Bye.